Welcome to our podcast, where we share our professional knowledge and experience for those considering commercial mortgages or loans. If you are in need of commercial mortgages or loans, contact us for a no-obligation free consultation. Let's start today's episode. Understanding franchising in the UK. Franchising in the UK is a popular and proven way to expand a business by forming a partnership between a franchisee and a franchiser. The franchise industry covers a multitude of sectors on both the local and national levels, providing a diverse range of opportunities for entrepreneurs to invest in a business model with established systems and a track record of success. When you decide to buy a franchise in the UK, you are entering a joint venture with the franchisor, who will usually grant you the rights to use their business's name, branding, and services for a specified period. In return, you will need to pay an initial franchise fee, as well as ongoing royalties and marketing fees. The franchisor will usually provide support and training to ensure your success in running the business, which can ultimately benefit both parties. It is important to understand the responsibilities you will have as a franchisee. You will be required to adhere to the franchisor's established methods and procedures, making decisions within the framework they provide. This may include purchasing products and supplies exclusively from approved suppliers, following strict operational guidelines, and participating in periodic evaluations to maintain brand consistency and quality. The franchise sector in the UK has experienced significant growth in recent years, contributing over £15 billion to the economy and employing over 600,000 people. This indicates a strong market for those considering a franchise opportunity. Before embarking on a franchising journey, it is essential to research various franchise opportunities within your preferred industry and closely examine the support, training, and financial arrangements on offer. Remember, while franchising reduces the risk of starting a business from scratch, it still requires dedication, hard work, and financial commitment to achieve success. In conclusion, understanding the landscape and dynamics of franchising in the UK is crucial for potential franchisees seeking a successful and rewarding business venture. Embrace the challenges and opportunities presented by the franchise model, ensuring you are well prepared for the responsibilities and requirements of becoming a franchisee. With the right mindset and dedication, owning and operating a franchise can be a fulfilling and profitable experience. The role of the British Franchise Association. The British Franchise Association, BFA, plays a crucial role in the UK's franchising industry. As a not-for-profit trade association, it sets and influences standards for franchising, ensuring ethical conduct and best practices are maintained. As someone involved in franchising, it's important you understand the BFA's functions and how it helps both franchisors and franchisees to navigate the industry. The BFA's Code of Ethical Conduct serves as a guideline for members to ensure they abide by high ethical standards and foster proper business practices. By adhering to this code, you can be confident in the professional conduct of BFA-affiliated franchises. Membership criteria are well defined by the BFA, ensuring that quality franchises are admitted as members. If you're a potential franchisee, this provides you with a level of assurance in the franchisor's commitment to best practices. For franchisors, membership signals a commitment to adhere to the highest industry standards, providing a competitive advantage. The BFA offers a complaints and appeals process to protect the interests of its members. This allows stakeholders like yourself to raise concerns should you encounter any ethical violations or conflicts. The BFA will then investigate the matter, providing an impartial resolution. Through their advocacy and partnerships, the BFA influences standards and legislation not only in the UK but also across Europe. With affiliations to the European Franchise Federation, EFF, and the World Franchise Council, WFC, the BFA plays a significant role in shaping the global franchising community. Franchisors and franchisees can benefit from the BFA's numerous educational resources and networking events, allowing you to learn about industry trends, best practices, and connect with like-minded professionals. Utilizing these resources can help you make informed decisions and strategize effectively for your business. Being aware of the British Franchise Association's role and how it supports the UK's franchising industry is essential for anyone involved in this sector. By maintaining high standards and offering valuable resources, the BFA promotes ethical conduct and business success for both franchisors and franchisees. Common costs in franchising. When considering starting a franchise in the UK, it is crucial to understand the common costs associated with setting up and operating a franchise business. This knowledge will help you plan your budget and make well-informed decisions. In this section, we discuss the common expenses and expenditures you are likely to encounter in your franchising journey. One of the first expenses you'll encounter is the initial franchise fee. This fee acts as your entrance into the franchise system and is often the most significant single cost. Initial franchise fees can range from as low as £5,000 to as high as £500,000, depending on the franchise brand chosen. Beyond the initial fee, you'll need to allocate funds for the premises where your franchise will operate. Whether you lease or purchase property, this will require a considerable investment. Franchises often require an ongoing royalty fee for the use of their brand, system, and support. This fee is typically calculated as a percentage of your monthly or annual revenue. It ensures that you continuously benefit from the franchise's expertise and support. As a franchisee, you'll need to allocate a budget for working capital to cover day-to-day operational expenses. This may include costs for staffing, utilities, and inventory management. Additionally, some franchise systems require franchisees to maintain initial stock levels to ensure the smooth running of the business. Another essential cost to consider is promotional costs. While some franchises provide initial marketing support, it is crucial to continuously promote your franchise locally to drive customer awareness and engagement. Depending on your franchise's requirements and your own marketing plans, these costs may include online advertising, print materials, and public relations campaigns. Finally, there are the startup costs that every new business has to bear. This category may include expenditures such as purchasing equipment, registering your business, obtaining relevant permits and licenses, and conducting any necessary renovations or improvements to your premises. Overall, the costs involved in running a franchise will vary depending on factors like the brand, size, industry, and location of your business. By understanding the common costs discussed here, you're better prepared to make informed financial decisions and succeed as a franchisee. Securing a franchise loan. When starting a franchise, securing a franchise loan is often a crucial step in establishing your business. To get the necessary funding, follow these steps. First, research the franchise you want to invest in and gather information on the required investment amount. This information could be found in the franchisor's franchise disclosure document, FDD. Knowing how much you need to borrow is crucial in securing a loan. Next, prepare a detailed business plan that outlines your franchise concept, target market, operating costs, and projected financials. Banks and lenders appreciate a well-thought-out plan, as it gives them confidence in your ability to repay the loan. It's important to assess your credit score and financial history before applying for a franchise loan. Good credit and a stable financial situation increase your chances of securing a loan. If your credit score needs improvement, consider taking steps to boost it before applying. When you're ready to apply for a loan, approach reputable banks and financial institutions that offer franchise finance. In the UK, some banks have dedicated franchise departments that understand the specific needs of franchising businesses. Keep in mind that banks often require collateral when lending to franchisees. Collateral could include assets such as property, vehicles, or equipment that could be of value to the bank. Make sure you have enough collateral to secure the loan amount you need. Lastly, be prepared to invest some of your own capital into the business. Banks and lenders prefer to see that you have a personal stake in the success of your franchise, as it demonstrates commitment and confidence in the business. By following these steps and approaching the franchise loan process with a confident and knowledgeable attitude, you should be on your way to securing the necessary funding to start your franchising journey. Remember to maintain a clear and neutral tone while communicating with potential lenders to give them confidence in your ability to repay the loan. Dealing with banks. When seeking financing for your franchise in the UK, you will likely interact with a reputable finance broker who can take your case to the most suitable lender. Each bank has its own financing options, services, and support systems tailored to both established and emerging franchises. First, familiarize yourself with their franchise-specific offerings. These could include dedicated franchise units, specialized products, and services designed for franchisees. For example, some lenders provide a comprehensive franchise guide, which covers essential information specific to franchise industries. Some, on the other hand, offers access to a team of experienced franchise managers who can provide you with tailored advice that caters to your needs. Understanding the borrowing requirements and eligibility criteria is crucial. Each bank will have different loan-to-value ratios, interest rates, and lending terms. Ensure that you research these factors, as they will significantly impact your chances of securing a loan. While doing so, pay close attention to the bank's transparency regarding fees, penalties, and extra charges, as this will help you accurately project your expenditures and profits. Maintain a strong working relationship with your chosen bank by keeping them updated on your progress, financial performance, and any changes in your business strategy. The stronger your relationship is with the bank, the more likely they will be to support you with additional funding or advice when needed. Furthermore, understand the different ways your chosen bank might communicate with you, be it online portals, dedicated account managers, or in-person meetings. By researching, selecting, and maintaining a working relationship with your chosen bank, you can navigate the process of securing financing and support for your franchise endeavors with confidence and ease. Remember to be proactive and keep your bank informed about your business developments and needs, which will enable you to access the resources and guidance essential to the growth and success of your franchise venture. Various financing options. When considering financing options for your franchise in the UK, it's essential to explore the various avenues available to you. This will allow you to make an informed decision and find the best fit for your business needs. One option to consider is funding from financial institutions. Banks may provide loans or a line of credit to finance your franchise. For example, some banks offer support and guidance on financing a franchise. In general, securing a loan or credit from a bank can be easier than you think, as franchises are often seen as less risky investments due to their proven business models. Asset finance is another viable option for financing your franchise. This type of finance allows you to purchase or lease equipment, vehicles, or other assets necessary for operating your business. This way, you can spread the costs over time and avoid paying hefty upfront fees. Invoice finance might also be useful for your franchise, especially if you offer services or products with payment terms. By using invoice finance, you can unlock cash tied up in outstanding invoices to improve your cash flow and cover ongoing expenses. An overdraft facility could provide you with the flexibility needed in your franchise's early stages. Overdrafts allow you to access additional funds when required, enabling you to handle any unexpected expenses or short-term cash flow issues. If you have a strong network or are ready to share ownership, equity finance may be an option for you. This involves raising capital by selling shares of your franchise to investors, such as friends, family, or angel investors. The UK government offers the Enterprise Finance Guarantee (EFG) scheme, which might be another avenue to explore. It provides guarantees to lenders supporting businesses that may not have the necessary security for a conventional loan. This can help you secure the funding you need to start or grow your franchise. Remember, each financing option has its own set of requirements and benefits. Carefully assess your situation and consult with experts before making any decisions. By considering all available options, you can find the ideal financing solution to launch and grow your successful franchise in the UK. Applying for a business loan. When considering franchise finance, a business loan is often one of the first options that comes to mind. As a potential franchisee, applying for a business loan may seem daunting, but with the right approach and preparation, it can be a straightforward process. Here's a step-by-step guide to help you navigate the business loan application process. Firstly, analyze your current financial situation and your borrowing capacity. Determine how much you are willing and able to invest in the franchise and how much funding you'll need. Remember, business owners are often required to provide some form of collateral or personal guarantee when borrowing from a lender. Next, conduct thorough research on available franchise finance options. Look for lenders with experience in franchise financing, as they will have a better understanding of the specific needs of your business operation. You can use loan comparison services to help you identify the most suitable finance providers. Once you have identified potential lenders, prepare a comprehensive and well-structured business plan. This plan should detail your franchise concept, expected revenues, market potential, and your plans for growth. Lenders often look for clear, realistic, and achievable objectives when approving loans, so be sure to include these in your plan. Ensure all your financial information, such as tax returns, financial statements, and credit reports, are up to date and accurate. Lenders will use this data to assess your creditworthiness and make their final decision on granting the loan. It's essential to be completely transparent with your documentation to avoid any issues during the approval process. As you approach potential lenders, present your business plan and financial information in a professional manner. Be prepared to answer any questions related to your franchise and your plans for expansion. Demonstrating that you are knowledgeable, confident, and have a clear vision of your franchise's future can significantly improve your chances of securing the loan. Lastly, review the terms and conditions of any offers you receive thoroughly. Consider factors such as interest rates, repayment terms, and any additional fees when deciding whether a loan offer is suitable for your needs. Don't hesitate to negotiate with lenders to obtain the best possible deal for your franchise. By following these steps, you'll be well on your way to successfully securing a business loan and starting your franchise journey. Remember to remain patient and persistent throughout the application process, as it may take some time to find the right financing option for your franchise venture. The role of credit score in franchise finance. Your credit score plays a crucial role when seeking finance for your franchise business. As a measure of your financial trustworthiness, it impacts the interest rates, repayment terms, and the amount of funding you can potentially receive. Having a strong credit score demonstrates to lenders that you are responsible with borrowed funds, making them more likely to approve your application for franchise finance. For instance, a higher credit score can lead to better interest rates, which essentially means lower costs for you when repaying the loan. On the other hand, a low credit score may result in less favorable interest rates. This translates into higher costs during the repayment period. Lenders could also restrict the amount they are willing to lend, or even decline your application if they perceive your credit history as too risky. It is essential to maintain your personal credit history in good standing, as lenders often review both your business and personal credit scores. By paying off any outstanding debts, managing personal finances responsibly, and avoiding any issues such as late payments or bankruptcy, you improve your chances of securing favorable franchise finance terms. In conclusion, your credit score and history play a significant role in securing finance for your franchising venture, as they directly impact interest rates, repayment terms, and the amount you can borrow. By proactively managing your credit, you can enhance your financial profile and improve the likelihood of successfully obtaining the necessary funds to launch and grow your franchise business. Remember, keeping an eye on your credit and making improvements wherever possible will be beneficial to your franchise finance journey. Evaluating a franchise opportunity. When considering a franchise opportunity, it is crucial to examine various factors to ensure you are making a sound investment. Before committing to any franchise business, assess the following aspects. Market potential. Research your local region to gauge the market demand for the franchise's product or service. Determine if there is an opportunity for growth and success in your area. Franchisor's experience. Inquire about the franchisor's track record in using the franchise model. Their experience and knowledge can significantly impact the support and guidance you receive as a franchisee. Financial evaluation. Examine the financial aspects of the franchise opportunity, including initial investment, ongoing fees, and royalties. Ensure that the income generated can meet your financial expectations and goals. Personal assets and liabilities. Assess your current financial situation, including your assets and liabilities. Make sure you have the necessary funds or can secure financing to cover the initial costs and sustain the business during the early stages. Tax implications. Be aware of the various tax requirements associated with owning a franchise in the UK. Consult with a tax advisor to help you navigate the potential tax implications and ensure compliance with all relevant regulations. Earnings. Obtain an accurate estimate of the earnings potential for the franchise opportunity. Request financial information and projections from the franchisor or current franchisees to gauge the potential return on investment. Buying process. Familiarize yourself with the steps involved in buying a franchise. This may include conducting due diligence, securing financing, signing a franchise agreement, receiving training, and launching the franchise. By thoroughly evaluating these factors, you will be better equipped to make an informed decision when selecting a franchise opportunity. The more research and analysis you conduct upfront, the higher the likelihood of your franchise business's success in the long term. Creating an effective business plan. When starting a franchise in the UK, it's crucial to create an informative and well-structured business plan. This plan will not only guide your decisions but also help you secure franchise business loans and build a strong foundation for your business. Here's what you need to include in your business plan. Firstly, begin with an executive summary, which provides an overview of your franchise, including the goals, target market, and the unique selling points. Make sure to keep it brief but informative to capture the attention of potential investors or lenders. Next, delve into the details of your market research and competitor analysis. Demonstrate your understanding of the market you plan to enter and highlight the opportunities that will set your franchise apart from the competition. In this section, you should also mention any potential challenges or risks and your strategy to overcome them. To showcase your expertise and capability, outline your team's skills and experience. Explain how these skills will contribute to the success of your franchise. If relevant, you can also discuss any plans to improve your team's skills through training and development programs. A crucial component of your business plan is your financial forecasts. These projections will help you understand the costs involved in starting your franchise, and inform potential investors or lenders about your expected financial performance. Include a breakdown of the initial setup costs, ongoing operating expenses, and projected revenue over a specified period. When addressing business innovation, highlight any new products, services, or processes that your franchise aims to implement. This section will show you can stay ahead of the competition and adapt to the evolving market trends. Lastly, ensure your business plan is clear, concise, and free of errors. Remember, a well-written and thorough business plan increases the chances of securing funding and sets the stage for your franchise's success. Managing your franchise finances. When embarking on a franchise journey, it is crucial to manage your finances effectively. As a franchisee, you will encounter various financial aspects, including franchise fees, ongoing royalties, and operational costs. This guide will provide valuable insights on managing those finances to ensure a successful franchise venture. To maintain control of your finances, you must establish a solid understanding of your franchise's cash flow. Implementing effective bookkeeping practices is instrumental in monitoring and improving your franchise's financial health. Consider investing in cloud accounting software to help you stay on top of your finances and have a clear view of your franchise's performance. One important aspect of managing your franchise's finances is addressing security concerns. Protecting sensitive financial data and transactions from unauthorized access is crucial. Implementing strong passwords and enabling multi-factor authentication are excellent practices to secure your financial accounts. Understanding your franchise's liabilities, such as loans and debts, is essential in maintaining financial stability. Regularly reviewing your debt with an expert can help you identify lower-cost options and manage your liabilities effectively. Be cautious of excessive borrowing, as it can lead to financial distress and negatively impact your franchise's operations. Securing a flexible business loan can be a practical option for financing your franchise. These loans allow you to adapt the repayment terms according to your franchise's cash flow, reducing financial pressure during slower periods. Research available lending options and choose the one that best fits your franchise's needs. In addition to loans, consider a business overdraft as a buffer for your franchise's finances. Overdrafts offer a convenient way of accessing additional funds when required, providing financial flexibility and ensuring the smooth operation of your franchise. Proactively managing your franchise finances is critical for business success. By implementing effective bookkeeping practices, securing your financial data, understanding and managing liabilities, and exploring flexible financing options, you can confidently navigate the complexities of franchise finance and pave the way for a thriving franchise venture. Additional resources for franchise finance. When it comes to starting a franchise, you'll need to be well prepared for the various financing options available to you in the UK market. Here are some additional resources to help you understand the funding process and secure the financial support you need. A key element in obtaining financial support is creating a thorough franchise business plan. This document will outline your vision, goals, and financial projections, which will not only provide you with a roadmap, but also instill confidence in potential lenders. When discussing financing options, you may come across both franchise trade finance and franchise lines of credit. Trade finance assists in funding the purchase of goods or equipment necessary for your franchise, while lines of credit are flexible forms of financing that can be accessed as needed. You might find our guide to funding your franchise helpful in understanding these options better. Another financing option worth considering is franchise invoice finance. This alternative funding source enables you to release cash tied up in outstanding invoices, making it especially useful for businesses with long payment terms. You can learn more about invoice finance and how it might support your franchise business in our other articles. As you explore these resources, keep in mind that buying a franchise business comes with costs beyond the initial investment, such as ongoing fees, inventory, and marketing expenses. Taking the time to familiarize yourself with these financing options will help you make a more informed decision when it comes to funding your franchise. Remember, staying confident, knowledgeable, and clear in your approach will go a long way in ensuring your franchise journey is a successful one. How can I obtain financing for a franchise in the UK? To obtain financing for a franchise in the UK, you should first understand the costs associated with your chosen franchise. Then, prepare a comprehensive business plan that outlines your financial projections and strategies for success. Approach banks or alternative lenders with your plan, and consider government-backed schemes such as the Enterprise Finance Guarantee Scheme to improve your chances of approval. What are the main franchise lenders in the UK? There are many franchise lenders in the UK, include some high street banks. Working with our dedicated experienced franchise brokers that understand the franchise business model can increase your chance of acceptance. Additionally, some alternative lenders such as asset finance companies and peer-to-peer lending platforms may also be options for financing a franchise. Is there a possibility to finance a franchise with no money? Financing a franchise with no money can be challenging, but not impossible. Some franchises may offer financial assistance or payment plans to help you get started. You could also consider borrowing from friends or family, exploring alternative finance options, or tapping into government schemes that support entrepreneurs. However, it's important to carefully weigh the risks and be realistic about your ability to repay any loans. Do franchise owners make a profit in the UK? Franchise owners in the UK can make a profit, but it's not guaranteed. Success depends on various factors, including choosing the right franchise, management skills, adequate financing, and market conditions. As with any business, careful planning and research are essential to maximize the chances of making a profit. What is the Enterprise Finance Guarantee Scheme and how can it help? The Enterprise Finance Guarantee Scheme is a UK government-backed initiative that aims to help small businesses access financing. Under this scheme, the government acts as a guarantor for up to 75% of the loan amount, encouraging lenders to provide financing to businesses that may not have enough collateral or a strong credit history. This scheme can be helpful for prospective franchisees looking for financing but facing challenges in securing loans, due to insufficient collateral or unproven track records. How do you value a franchise business in the UK? Valuing a franchise business in the UK typically involves evaluating factors such as the franchise's brand recognition, profitability, growth potential, and the stability of the overall franchise system. You can use valuation methods such as the multiple of earnings, discounted cash flow, or asset valuation depending on the specific franchise business. It's advisable to consult with a business valuation expert, or accountant with experience in valuing franchise businesses to ensure an accurate valuation. For more information, you can contact us by clicking the link in the description of this video. Thank you for listening to our podcast. We look forward to coming together again in the next episode to share more information and experience with you. For now, goodbye.